This is Justin Pulitzer. This is my weekend review for the week ending March 15th, 2015. The Ides of March. As the saying goes, beware the Ides of March. Didn't work out too well for Julius Caesar. Stabbed 23 times. Anyhow, let's discuss the levels in the charts, what's going to be up on deck this week. The first and foremost major big event is this Wednesday. It's a Fed meeting. Janet Yellen is expected to possibly remove the word patience from their statement. She may leave it. The market's probably going to react on this. I'm going to go through some of the levels that I see as key for this week. Another variable that's been talked about a little bit, particularly on Friday, is that Vladimir Putin has been missing from the public eye for about 10 days. I saw a very entertaining article in the Post this weekend saying that he has some type of a mistress in Switzerland and he was there for her birth. I don't know. I mean, the guy's missing. It could add some volatility if that, if he meets an untimely demise. I've always thought he was more the guy who makes people disappear than rather disappear, but it's just throwing it out there. It was something that was being talked about. Anyhow, let's jump right into SPY. You can see that we have been coming down, and we had a bit of a rally we held the 100 MA first and foremost. We actually rallied, I think, a little bit before it. We rallied back up on Thursday over the 50 MA, back above this 206.42, which I had been discussing as the breakout range. Then Friday, we had a little bit of continuation up into where my caution zone is, 207.84, but we backed off and closed below the trend line with another hold of the 100 MA, but just below the 50-day and still over the caution. I wouldn't say the caution, but the range low that I had cited as being key, this 205.38. So where does that leave us? It kind of leaves us a little bit neither here nor there. So the expected move this week in SPY is $3.83, and as you can see, SPY closed at about. The close here was 205.83. So if we were to go by that expected move for the week, that would roughly take us down to this gap fill of this 201.90 that I've been saying is important around 202. And you can see that we have a rising 200-day moving average that is going to be coinciding soon with that level. As of now, it's around 200. So if things get a little bit squirrely, it's possibly that there's some type of an overshoot. However, you can see it's typical, as I've discussed, for breakout ranges and possibly even to mid-range to be tested, and we've been doing that. And if we were to do something like rally, that would bring us up a little bit under 210. I think it would be like 209.68-ish or what have you if you added that in, which would be roughly a little bit above the 20 MA. And back up above this key 208.97 reference high. And that would be assuming that this kind of plays out the way that the volatility has priced in. It is also possible we do have some type of outsized move, and that would put other levels into play. So let's discuss that a little bit. You can see that we have a secondary trend line. We've sort of been in an uptrend in an up channel from these lows, and we've been kind of just chopping around and grinding up. So the first level that would be key to me would be to watch if this trend line holds or breaks. And you can see just a little bit below there is this from this time frame, from here to here, that 61.8 Fibonacci level, which is 203.36, and you can see it sort of separates the distributions. If we were to lose that, I would say that this 201.90, like 202-ish, is in play here to fill up this gap, and then it's decision time. If that doesn't hold, obviously, the next big level that traders would be watching are the 200-day MA, and then these 100% retracements down to this low, which would be 197.86. After that, then we're talking about the primary trend channel, which is down here in this bigger picture from these lows all the way up to here. That 61.8 Fibonacci retracement coincides down there at 193.5. So those are the key levels if we are to have a move to the downside. If we are to move to the upside, the key levels that I would want to see is number one, first and foremost, to get back up above this 206.42, kind of above this breakout chop range, back into terra firma. This would be sort of like a look below and fail in that instance. Then we'd want to get back up over that 207.84, 208.97, which was these key reference highs, and then obviously a shot up over the all-time high, which would be over 212. Now, there's something that is concerning me, a little bit of loose change, so to speak, and that number is this 213.40 and possibly this 214.17, which are the 61.8 Fibonacci's extension of that move, and the big move, which was from the lows, from the March lows in 2009. If you look from, if you take the 2007, I'm sorry, this keeps, I don't know why it does this, but anyway, if you look at this 157.52 high to this low of 67.10, if you subtract this number, and then you, which comes out to, do I have the calculation? I don't have the calculation here, unfortunately. I do have it in SPX, so let's jump over to SPX quickly. If you look at this level here, the levels will roughly coincide. I'm just going to do this on the S&P 500 and the cash index. If you take a look, that the high here was 1576.09 and the low here was 666.79. The difference in that price is 909.30. If you multiply that by 1.618 and then take the that comes out to 1471.25ish, and then you add it to here, the level you come up with, and let me just bring us back into more modern times here. The level you come up with is 2138.04, and you can see that coincides roughly with a channel high here and slightly above these highs. Now, that's a really big number that a lot of technicians are going to look at, and I could see that actually, believe it or not, being the top, meaning the market could meet a very untimely fate if it gets there. Not to say that it has to be. It's also possible we do something like blow off and shoot through it, and there's some type of a really big move extension-wise over it. But it is a level to be cautious about, and I'm going to post in this in the upper right-hand corner. It should be up there now. Both the ES level, the S&P cash index, which is here, and also the SPY levels of what that coincides with. And that level, to me, is something to really be careful about. This chart's a little bit less messy than the other ones because they don't have all the levels demarked or demarcated or whatever. So you can see the this level here coincide. This is sort of like the mid. That would be that 201.90 that I was talking about. You can see that's just below here. The 200, which sort of meets the backside of this prior downtrend. That sometimes is a level for bouncing. Then if we went down to the 1972s, that's a key level. It's also like a distribution. It's a 50% retracement. And then the 61.8, I don't know if it's going to be a straight shot, but it could be down here at 1934. So that's just something to be mindful of. We mostly talk SPY, so I mentioned those levels before, and that's that with SPY. If you take a look at IWM, that's a little bit more encouraging as far as price action goes. You can see it had a little bit of a look below here, never got to the 50 MA. We didn't even touch it, and then rallied back up and sort of closed stronger on Friday. You can see it was this big bottoming tail, was like a look below. Again, this range just sort of filled the gap and then closed up fairly strong. So, as far as IWM, as long as we're over this 120.97, I'd say it's fairly strong. 50 MA, obviously, really key hold. That's that 119.63. If that's lost, we could do something like test the channel low, which might coincide with this 100 MA down here in the 118s, which roughly coincide with a little bit of a move into here. But as you know, what I think is the really key level to be over is this 117.37. As long as we're over there, I consider it sort of the upper distribution. It's like the bottom end of the upper distribution now. You can see volume-wise, that's really where it starts picking up big time up here. So as long as we're over there, I think that the market is still quote-unquote healthy. If we start losing that, it starts feeling like a little bit more trouble to me, and we might do something like come back down and retest the primary trend a lot significantly lower. Qs didn't have much of a rally this week, although I think a lot of that has to do with Apple softness, and I'm going to discuss that in a little bit. but you can see it's still fairly strong. It's got more relative strength in the ES, as in the fact that we're over the still over the 50-day moving average. I could easily see this pulling back, though, if there's some weakness early next week to the 100-day moving average of 103.54, and that's also the secondary trend line. I think if that holds, it's still quote-unquote okay, but gets a little bit more squirrely, because then we would be testing back into this chop range, sort of like the SPY is doing here. So 2 out of the 3 here are not testing back. This one sort of tested the top, held, and if it did have weakness, would be coming into here. So that to me would be a sign of a little bit more weakness, and there could be further correction. If this broke, obviously I'd be looking for a retest in here of these potentially of these lows down near 100, and possibly like this 9900 level, somewhere in there. But it is also possible that we catch some legs and make for a move back up, back to like sort of where this breakdown level was, back up around 108s. So that's what I'm watching in the Qs. A couple of things that have been getting a lot of talk are obviously is the TLT. I had flagged this as being expensive. It came back down, tested into this level, shot through it, bounced, still in a downtrend, making lower lows. This sort of had a bit of I wouldn't say an island reversal, though you had 2 days of this and then a gap back up, so maybe it was like a 2-day island. And it came back up to test the this old channel high and sort of the breakdown of this newer channel, and then has been backing off a little bit. So this is going to be really key. It did break the downtrend, but it's still this is sort of like a check back and possibly a fail. If it were to do that, I'd be looking for it to lose this bar here, really, this 205.92. So anything below 205.92 to me starts getting a little bit sketchy in TLT. If things go wrong, quote unquote, with or get if there's some type of a whiff of rates going lower, maybe the Fed doesn't decide to maybe they keep the patience, we may get a move back up and retest this swing high here about 130. This to me is all still really expensive. I mean, the 2009 top where this thing peaked, and you can see we're above crisis level prices in TLT and lows in rates, was 123.15. So anything above that to me is still really kind of expensive, and I would still say that bonds could have a significant move lower if the Fed decides that they're going to raise rates. It is potentially possible this could really fall out of bed and get nasty, maybe even down much lower. Anyhow, that's the TLT. Another really big cause for concern has been the move in the euro, the absolute collapse of the euro. You can see it's starting to get very, very steep. Let me give you a little bit more of a time frame here. If you take a look in the last 2 years, it's just been this has just been recently getting very, very, very steep, and I think getting to be almost unsustainably steep. If you take a look, there's a lot of talk about the euro going to parity, and it's sort of like a given, a fait accompli that it's going to get there. And there's actually a bet going around on TD Ameritrade. They're talking about what date is for sure the euro going to parity with the dollar, and my answer to that was sort of just for the purposes of the competition, that maybe it won't get to parity. Since everyone's sort of looking at it, you probably have a lot of people chasing this short, and you can see we have a pretty defined channel here, and that channel low coincides with 103 and $1.03 and $1.02. So maybe we kind of get close, but we don't get there. It's kind of close and no cigar, and we do something like bounce back up and retest the breakdown point up here close to the 120s. So that's my thinking of a potential scenario in the euro for some type of a disappointment. I mean, it's really not that much further to go. Only about another 4.8% to go lower for parity. But it is. I am watching this channel. It's a pretty defined channel for a significant amount of time, and I could see that this being potentially a base for the euro. So that is the euro. Another one to watch, XLU, not one I talk about a lot, not really very sexy. You can see we've been in a very defined up channel. This isn't so relevant here, the 40 for now, although it is. let's take a look on this sucker. We're still in the weekly. We don't want the weekly. We want the daily. So 9-month daily. So you can see we overshot the channel here to the upside and sustained it sort of with like a bit of a check back higher, and now we're not able to sustain it, and we're testing the uptrend within the former up channel, or I should say still the up channel. So I see that this area being really key. If we can't hold here, you can see we're just sort of stuttering. I would say it's potentially possible that we do get down to that 40 level, that 39.97, which is the 61.8 of the damn it, we're not seeing it. 2 years. Let's go. I want to show you. For this, it goes back a little bit further, but take my word for it. This is the 61.8 down here. It's also sort of like where these, a little bit below these tops. This area would coincide with the up channel, and it's also a big move, but with regard to volume distribution wise. So I see that as being, just clicking mania here. I can see this here being a really key level as the really sort of the primary uptrend if this does something like break here and fall out of bed. There was a breakout level around 41.44 around here, so this could also coincide. You could see that's the edge of this volume distribution, but I expect that's why this is slowing down here, because it's getting some price memory here, and it's also moved a lot already from the highs. So this is sort of it, do or die here. If we lose this these lows here of this 43.01, then I think we could potentially see this 41.44 and potentially an overshoot and test down to the channel low. So that's what I'm looking in XLU. I am looking to kind of long up a little bit on this. Utilities are always, steady dividend producers and income streams, so I am looking for some type of a move down here. I would be a buyer down there. So that's XLU. Apple, I've been discussing this on the stream a lot, so I don't really want to spend too much time on it in this video. Let me get us a little bit more modern. I don't have to keep shifting back each time. So we got the 129s, which I told you was the big 618. You can see it did it a little bit ahead of the markets here and did have a bit of an overshoot to the 133s, but this level has been really choppy. I had cited on the stream that it had the inability to hold the 20-day moving average these multiple days in a row. We've had a bit of a breakdown. We're still in an uptrend. I mean, you can see this is the channel, but we're sort of like in a bit of a down channel within an up channel. So I'm looking, the key levels I'm watching in Apple are this 119.75, which was the breakout over this flash crash high and the high a little bit above there, and this consolidation range. So I think between there and the 118.12, which was the earnings gap high of day, that, between this 119.75 and that 118.12, I think this area here is good for a right or right out by the dip scenario. If it's wrong, the next level to hold would be this 115.07, which was the flash crash day close. And then you start getting into some channel lows down here that could get a little bit, depending on how long it takes to get there, you could be talking about 14s or 13s or even possibly 12s. The day of the earnings, which would be start the gap fill, would be at 112.48. So it is potentially possible that Apple does something like overshoot down to there. Although I know a lot of people are talking about 120. So to me, like I said, that this 119.75 to 118.12 is a right or right out by the dip. I'm currently playing this with put spreads. I'm sorry, not put spread, put ratios. I'm long one time the 123 puts and short 2 times the 120 puts. So that would take my break even, I think, down into like the 116s or so. So I'm sort of thinking it's okay if Apple does something like overshoot by a couple of bucks. That to me wouldn't hurt the position. It would actually help it. And that expires this coming Friday. So that's what I'm looking to do with Apple. Amazon, I had discussed, might be looking to retest the old highs. It sort of is rolling over a little bit here. I would be playing this if it's like I said, I did say it was tough to play this with, if you're first entering here. It's around when I was discussing with the last video just to play for here. But now that it's coming down a bit, I think it could be setting up again. I'd be looking to buy this thing as a right or right out play off the 50-day moving average or somewhere somewhere inside this earnings gap bar. That it's got a, I mean, there's a pretty decent range. The low is 340, the high was just under 360. So somewhere, you know, if you could get close to the low of that bar, that's about a 50% retracement of this entire move. I think that would, to me, would be a great right or right out play. It may do something like overshoot to the, to the 61.8 down at 325. But to me, I think that this, you could see the volume distribution. This is the node here around the 50%. I'd be looking to play that for right or right out. That's around 337. If you want to play it now, short dated put ratios, which would be terminating somewhere in between this area. I may talk about it a little bit on this stream because I may actually put the trade on. But I would be buying, like some of these and then selling some of these and trying to get it either on for even or for some type of a small net credit. BABA is just a complete choppy mess. I had been discussing this, that I thought that this could be like a seller shut off type of a bar, and it just kind of rolled over. They have a lockup coming this week. They have earnings coming up soon. I think that this actually could potentially still resolve higher and retest 90. But I just want to be mindful, if you lose this this low of day here, which was like 80.03, let's just say 80, and I know this week there's a very high interest in terms of the puts, so that might serve as sort of a put wall, so it might not break down. But if they can't crack it this week, if you can't take out the 80, then I think the stock is going to go higher, because if it can't go down on the lockup, it's probably going to go higher. And then you might have people buying, covering shorts and getting ready for earnings. There could be some type of a rally. If we do break this, though, I think that the risk is down into the mid-60s, which was really where the IPO priced before it hit the secondary market. So that, to me, is BABA. Yahoo is kind of been acting as if like as a tracking stock for BABA, and you can see it's kind of getting low, down to like the channel low. I think that this on some type of a weakness here, somewhere between this gap fill of this 40.18 and this channel low here, which coincides with like 41.5-ish, somewhere in here would be a good idea to sell some puts. If you can sell some like 36s or 37s, I think that would work, or even just do common for right or right out type of action. This would be, though, a look below the channel. It might just be dangling stuff and noise. What I would love to see is like some type of a sharp move lower here and then a close back up above the channel, and then you could use a over that high of day as an entry. So that is Yahoo. eBay, quick one, not one I talk about a lot, has been in sort of like this stealth up rally. It's you could see it hit this 57.05 again. Finally, we broke out up to 60-ish. I think a check back into this range, somewhere between the breakout of 57.05 and the 50-day moving average, I think that area would be a good right or right out type of an area to sell puts into. Like if you could get somewhere between 57 and like 55.74, which is the 61.8 of this range. So somewhere between the 50% and the 61.8, I think is a good right or right out type of a play for a buy for eBay. Facebook, still chop. It's just been really messy. You can see this one sort of looks a lot like eBay in the respect that it tested up here, again up here, and it's forming itself some very poor highs. You can see there's no elongation here in terms of volume. So I think that this will still resolve higher. We had a successful hold of the 50-day. Friday was a little bit choppy. It's been sort of a mess. I've been talking about playing this with hedges in terms of like put ratios and selling upside calls on pops. Earnings are coming up. It may just take the earnings for this thing to go higher, but it has been a very choppy stock. Another one very similar, social media space, is this Twitter. I had discussed that $50. I was on Shadow Trader one day talking to Brad, and I had said about $50 was going to be the top, and it was 50.01, and we're sort of just backing off and chopping. It's still in a downtrend, really needs to take this high. I think if we could take this high, you can get up into the 53s, 55s, and if the earnings are good, I think you could get even into the 60s. But obviously the first target would be this 55.99, this like 56 level, which would be sort of, if you broke here, you'd fill up the triangle up to here. So I think that what the street really needs to see is you had one good earning here. I think it needs to see a second one back to back. If not, we're going to probably come back down and retest the lows. And that's really the truth, somewhere in these 40s or even mid-30s. So I'm sort of hoping that this is a little bit weak into the number. I think that would set up as an easier type of a long for the earnings print, like maybe if you came down into these 41s. somewhere between 43s and 41s. I think that's a good spot for right or right out by the dip. So that is Twitter. Gilead isn't one I've mentioned a lot recently, but it's just been in this compression of price. You can see we've had higher lows and lower highs. I think that this is going to set up for some type of either short or some type of a long on a snap of the downtrend or a snap below the sort of the uptrend for some type of multi-dollar move in either direction. And I'm just going to be sort of watching this to see how this plays out. Either if we snap here, I'll be playing it short. If we can break up here, I'll be playing it long. So that's Gilead, and just keep an eye on those reference highs and lows. Right here, I think a lot of people, you can see, played here. It held the 200. It held the 200 again. So I would think a lot of people think the bias is higher. So you can do some type of a right or right out play with, let's say, 98.70 or so as your, actually, what was this here? The lows. Yeah, 98, 98.70-ish here. If you get below there, you probably want to be playing it short. If you can get above the channel, you want to be playing it long. The trend, you want to be playing it long, so that's Gilead. Google, I had discussed this being a sale up here between 57s and 80s. It overshot a little bit, and now it came back down. I think that somewhere between this 45.41, which was this consolidation breakout, and this 55.33, which was up here, and you can see we're looking into it. I think that this area is good for right or right out. You might want to sell some puts, or if you want to play it sort of like chicken hawkish, you can play it with a put ratio with, maybe the lower put somewhere down here, actually around 525. If you can get that as your bottom area, I think that would be a good reference area. Like if you bought up here some puts and sold 2 times as many down here, that would be, you'd get the move down, and then you'd probably also get a little bit for the bounce. So that's what I'm thinking with regard to Google. Priceline. Didn't do what I had discussed in terms of the ideal scenario of just kind of chopping underneath the downtrend, consolidating, and then going. I had actually discussed this in the last few videos about being a buy off the 200, and someone asked me about it on the stream on Friday. Is it time? And I said you might want to wait a little bit, just because I didn't like the previous days. I would have liked it if it came down in a straight line. I did not like that it sort of had a couple of days of consolidation and then was breaking. However, I do think we are coming into a buy zone with Priceline somewhere between this 50% Fibonacci move and the 61.8. So if you want, you could do some type of put ratios with the lower 61.8 being your termination point, like you're long these puts and then short 2 times as many down here. Or if you want to just be nimble, get ready to buy some shares for some type of a bounce. I still think the safer bet is to buy it on momentum over a break of the downtrend line. But, if we do come down here, this area, would be a gap fill and a take back of a lot of this move. And I think that the stock would have been oversold and ready for some type of a bounce. So for me, the best plays usually are the extremes of the ranges, like short the top of the channel and then buy the low of the channel. If you want, you might want to wait for some type of a move back down. But for me, with these momos, like I said before, I'd like to buy it on momentum, but I know people get anxious and they like to buy. Down here would be a good right or right out type of a scenario. I had a request this week. I don't usually always take requests, but it was asked to me nicely, and it's a stock I had been wanting to cover and haven't had a chance to. That's this Palo Alto Networks. It's been a beast, right? This is sort of like that FireEye, CyberArk type of a thing. It's been well over the primary trend for a while. It's held this, now has a secondary, and now it's sort of like forming a tertiary trend. I should really make this, it's really a tertiary channel, so to speak, and is sort of at the risk here of now making a bit of a lower high. So I would be looking for some type of a right or right out play off the, let's say, the 50-day moving average. You can see it held it here once, twice, maybe 3 times as a charm if it comes down, and maybe if it coincides with this level. But if you start getting below this 134.07, it starts getting, I wouldn't say really super duper dicey, because you're still over the 128 neckline breakout, but you're coming from then, let's say this did this early next week and you came down to retest the 128. Would the 128 be a buy? I would say yes, it probably would for right or right out type of an action, but keep in mind where you'd be coming from. You'd be coming from a lower high and making a lower low. So that to me is really key. I would say 128 for me would be right or right out. You may do something like overshoot into the range, like into 125. So maybe the better play would be when you come down in here to sell some like out of the money puts that are like in the 118 or lower strike, because that's a 50% Fibonacci. Maybe you want to sell it at the Fibonacci's, like maybe 118s or 111s if you make a move down here. After, let's say, multiple days down, that would be probably if it's like a week, that week, or, weekly options, I think that those would work out really well. So that's Palo Alto Networks. Tesla, same old story, right? Just really choppy, and it's been kind of ugly. You could even say fugly, right? But we're sort of a family channel here. So this 185 is really key. This was the low in the earnings, and it reversed up. It couldn't break the channel, lower highs, now making lower lows. So this 185 here to me is a really critical level. It's probably a good right or right out area, actually on the short side, because you might play for some type of a breakdown to the channel low. There's a reference low in the 177s, but you may have some kind of a washout here down into like the 150s, believe it or not, 155-ish, which would be the channel low. It could also do something. Tesla's a hard stock to short because for me the story has always been a stock that is poorly distributed, with high insider ownership and a high short interest. Those three lead to squeezes, and you could have something like where the stock on news gaps up on Monday over the over this like secondary downtrend, and then just keeps running, like day after day. But it is weak. This 185 I think is a good right or right out for like sort of like the 80 is for BABA for both longs and shorts. If you want to try it long 185, go ahead. Although keep in mind this is like multiple touches sort of. The more times you knock on the door, the weaker the support becomes. For me, really what I would love to see is that type of a shock and awe move that catches everyone and gaps up and keeps going and then breaks the downtrend line and then takes these highs, and you'd reverse the pattern of lower highs and lower lows and start making higher highs and higher lows. Ideally you'd see this thing come up, back off, make a higher low, and then you'd be playing for continuation. That's sort of how momentum works. It's hard to catch the knife falling. It's easier actually to short when they're falling, but Tesla, like I said, those are the levels I'm watching. Anyhow, I do a lot of discussion about market profile, and I was going to include what I see as poor highs and poor lows in this video, but I decided I'm going to do another video, like a separate, like couple of minute video on that. So keep your eye on that in the stream. I will do that and post it. I may do it now, I may do it in a day or two, but it will be posted. Anyhow, that's my story. I'm sticking to it. Let's have a great week. If you like this video, please hit the like button, and please leave some comments. I always like some feedback. If you're not already, please follow me on Twitter. My handle is @JustinPulitzer. So let's have a good week, and cheers.